Welcome to Rich Keys channel, where we unlock wealth one candle at a time. Here, charts don't lie and neither do we.
Disclaimer, not financial advice. The information provided on this channel is for informational and demonstration purposes only and should not be considered as personalized financial, investment, or trading advice.
Welcome back, traders. Today is Sunday, the 7th or the 20th of July 2025. Its time now is about 12:23 p.m. New York time, and I'm analyzing the S&P 500 to see what the major index would do in the coming week. Starting off my analysis on the weekly chart, and the uptrend on the S&P 500 is still intact. I think in the coming week we'll still go up. Whether the app would be a capitulation candle or not, I'm not sure, but that's my thesis for now, that we might get a capitulation candle into the coming week. We don't have any reversal candles on this weekly setup at the moment. As a matter of fact, the candle that we printed this past week over last week is a bullish engulfing candle. Obviously, as you can see, this is a bullish candle that overshadows the entire body of last week's open and close, suggesting to me that there is more potential for a further upside in the coming week. Probably some pullback and then an upside, and maybe that upside will determine whether we continue grinding higher or not. When I step down to the daily chart, there's a little bit of hesitation at this level, and I like us to explore this hesitation as I'm calling to see whether we get a capitulation candle or not. Our target zone for last week was not hit, though we got quite close. So we came all the way down last week into the 6209. We didn't quite get to the 6180 block. Yeah, and I think with this support being held and creating this candlestick, which is a very strong bullish candlestick, of course, the new high is a little bit of a question, as we could not close above this candle. Tells me potentially we probably could pull back a little bit, maybe to 62.84, somewhere here, and we might get a move up above this high. Now, if we do get a strong candle close on any of the days above this high, you can be sure that all this is behind us. All this consolidation is behind us now, and we might be grinding much higher. Now, whilst I spelled the good news on much higher call on Nasdaq, on the S&P, once we close above this 63.23, I also want to show the caution. Actually not a little bit, a lot of caution on this trade setup, and so this is one that if you want to go long, you want to be careful and make sure your trades are protected. So when you step down to this same daily chart, as I was showing you, there's a few RSI divergences that I want to show here. So we created a new high here. And if you come and look at your RSI came down, a little bit down, a little bit down. This is the level of RSI we were able to make on that new high. And right here it would show the divergence that I'm talking about on the RSI. MACD is already below zero and has already crossed on the MACD lines on the daily. Okay, so for us to continue going up, we would want to see a histogram bar cross the zero line to the upside, and we would also like to see this blue line cross the signal line. uh, you know that way we know we at least we have some energy to keep going higher, something similar to what happened here. So here MACD was below zero, and once we crossed up here, we're able to inch into a new high. So on the daily setup, there's caution, but it doesn't mean that it can continue going up. And the reason why I'm also quite looking for a retest of that high and probably a capitulation is my cycle. So we did a mid cycle here, a low cycle, mid cycle, and here it hasn't completed. It's more likely going to do a new high cycle and then come down. This is why I'm looking to see. Probably we might get a capitulation candle, as we still do not have any reversal candle on the daily, on the weekly. When I step down to the 4 hours, The 4 hours is the only one that gives us some clue as to whether we've exhausted our high or not. Because every time we inched a little higher, there was a sell-off that brought us down right somewhere below the 21 period moving average. Most times, your 50 on the 4 hours was a support. So here is another little cringe of a high, and we sold back down to the 50 period average. Here we cringed a little bit higher, and we came back to the 50 period average. And we have done the same thing here, and we are showing these three indicators having a divergence. Obviously, the reason why I also think that we might actually come down a little bit more before going up is this 4 hour setup here. So you get this strong bearish candle that we could not reclaim by the close of the day. We were just halfway off of it. I think would probably bring us back down somewhere to 62, 68, and then we might go and retest this high before if we should call the move up over or not. So that's my assessment on the S&P 500 in terms of my thesis statement. I also want to show other cautionary things that I've noted on the chart, and that is actually on the monthly chart. So for long-term investors, this has been my concern ever since we reclaimed this V-shaped recovery with a strong volume that absorbed all the selling and took us into a 4 month story. We are in a 4 month high now. Okay, we started off here in April, May, June, July, and July might probably also potentially print a new high. And my only question is here. You got this volumes bar here declining. I'm not very happy with this one. It doesn't give me confidence in the market to put a lot of stake in when you're going higher and higher. But the volume that is taking it higher and higher is actually getting smaller and shorter, smaller. This is the concern right here, right? So that's one of the cautionary things that I want to share on the S&P 500. Um, Other than that, I think we probably would continue cringing higher. So those are the warning signals. The other thing that I also wanted to show is that every time that we've moved about 6% of the 20 period average, um, we seem to get some form of a correction. And I was just analyzing this. So in 2021, when we moved away from the we were just about what close to, let me turn this the other way around, sorry. So this is the 2021 period moving average, and when we moved about close to 20% of this period average, we had a sharp correction. Um, and when I come to where we are now, we have literally done close to about the same. We right about 14%, so we're not quite there yet. But the further away we stretch from the 20 or 21 period moving average, this is why people are getting cautious on the market and calling for a recession, calling for a crash, calling for a pullback. This is the reason. When we move away from this 21 or 20 period average on the monthly chart by this far, there seems to be a pattern to it, that we seem to always retrace back down. And I think where we are now, we're getting quite close. So that's the caution that I have on here. Other than that, I think this might continue to inch higher. And that's my conclusion on the S&P 500. Still looking bullish. No reversal candles on the monthly, on the weekly, on the daily. On the 4 hours, there is some hesitation. And then, of course, on the hourly, as I showed you, we seem to probably be getting a little bit more of a pullback. And once that pullback is done, I think we might go retest that high. This is the 1 hour setup here. So the 1 hour setup has come to find support on the 50, and it's potentially going to either challenge this high here, go sideways, build up some momentum, and challenge this high here. But obviously, there's also a likelihood that we could just do this pullback and then come down to 62, 64, as I initially enumerated in the analysis. So I hope this analysis is informative enough and is clear enough and helpful to all my traders. All right, have a great trading week on the S&P 500. Thanks for your time. Thanks for paying attention. Cheers.